Research analyst at SOCGEN joins in now to talk about that. Nitin, hi, welcome to the show. HUL is one of your top buys. Were you happy with the numbers yesterday, or were you a bit cautious after the commentary from the management?
No, I think we were quite pleased with the numbers. It was in line with what the street was estimates, and in any case we are building in for the full year around 8% volume growth number, and more towards the volume picking up towards the second half of the fiscal year. So 6% number in the first quarter, it's a good start, I would say, to this fiscal year.
Okay. Well, there was a lot of angst about the price cuts. That doesn't worry you?
Right, so price cuts, you have to look in line with the excise duty impact, yes. And I think if you adjust to that, it was in line with what we were expecting, so no negative surprises on that front. And Lata, one thing which we at Societe Generale believe very strongly is that, pricing cuts in some of the categories is good. Now, you're looking at branded consumer companies. A lot of the moving parts which they play around is around the regional players and how they manage their moving parts and offer the product to the end consumer. So really, branded consumer companies have to continuously realign their portfolio to the market dynamics, which is changing every single day. Now, some of the input costs have corrected very sharply, and local players are gaining good market traction. So I think it's a good move by branded consumer companies to actually pass on some of the cost benefits to end consumers, which in turn should see demand revival going into the second half of the fiscal year.
Okay. So what kind of an upside would you see on the stock from these levels? So for, say, the next 6 to 12 months?
So yeah, our 12-month target price right now is 966 rupees. So we still see, there's a good upside from the current levels, and we are maintaining buy on Hindustan Unilever.
Okay. Would it worry, does the rural demand picture worry you? Or would you see that capping the growth this year for the FMCG companies?
So Lata, even in our previous interactions, that's one key area which we have explained very explicitly, that rural wage growth tapering or rural demand tapering is a key monitorable that, that it's a key risk to the FMCG sector. While we are still hopeful that maybe, the urban demand recovery is going to offset the rural slowdown or growth slowdown for the time being. Now, has it? Answer is yes. Because even in yesterday's comments, we did hear some description by the management saying that urban demand stabilization has happened. So that's a good positive development, I would say. Now, some of the macro indicators that we track of, be it in terms of job generation, or in terms of consumer confidence surveys, they all are showing uptick in the urban demand recovery. Okay. So it's a matter of time when it flows into the urban consumption demand revival. I think the key catalyst would be the festive season in next 2-3 months, and that's where we'll get the full picture.
Okay, the other stock that you have a buy on is Emami. What would be the triggers there, and what is the 12-month target price? Okay,
again, Emami is something that we love for a long-term perspective. I think the triggers are, again, the same, the good revenue top line, continuous momentum on the top line, the recent Keshkala acquisition, let's see how those numbers flow into the real P&L benefits, as well as the demand and the growth rates that the company continues to generate. Now, with companies like Emami, you have to look at it in a perspective that they are coming from a smaller base. So really, they can actually grow on a 20% plus revenue CAGR for a foreseeable future, against a slowdown which some other companies might be reporting. So we are hopeful, we are confident that Emami is a good pick to be, and we like this company.
But the other three competitors are Hold, Dabur, Godrej and Marico. Is it just a valuation story?
Okay, yes and no. I think valuations are a bit of a concern. Some of the other things which we mentioned about these companies earlier. Let's say you mentioned about Godrej Consumer. We are building in low teens level of revenue growth for the full year in the domestic business. While what will happen in international business is that currency translation impact is going to knock out your revenue growth. True. Although on constant currency, we are very confident in Africa and Indonesia, these businesses are going to deliver good 20% plus revenue growth, but currency translation is a concern which we are continuously monitoring. In the domestic business, of course, they will have a benefit of commodity tailwind. So that's the moving parts there, why we are keeping on sidelines on Godrej Consumer. Dabur and Marico, again, we are, we like these companies very much. It's just from a catalyst perspective and from a valuation perspective, we are keeping on sidelines.
All right, Nitin, we'll let you go on that note. Thanks for joining us and giving us your recommendations. So he has a buy on HUL with a target price of 966 for the next 12 months. But with that, it's a wrap on this edition of Bazaar. Traders only after the break.